Hey folks, Dan Frio here with your opening bell for October 20th, 2025. So the only news we have for today is the federal government. The federal government might be opening back up, and that's causing the markets to rally across the board. In today's video, I'm going to explain to you guys why I'm not a big fan of the government opening back up. It's not because of the government opening back up. It's the data that we might get once it does. So what we're going to talk about in today's video is the data that we get in. Is it going to be good news, bad news, or where it's going to take mortgage rates from here? So let's dive into today's data and try to figure this out. Because if you're watching, most likely you're a homeowner or home buyer, and my whole goal is to explain to you guys what's going on with those and the whys behind it. So let's look into today's news. Here's what the stock market is. If you go into the stock market, you're like, okay, the Dow Jones is up 423, S&P, NASDAQ's up, the Russell, they're all hitting record highs again. We have the VIX down. That's telling us the anxiety levels on Wall Street is down. We even have crypto up $200. What in the world is going on? Well, the only news we have out today so far is the White House is coming out saying the shutdown might be over. I'm not a big fan of that. And the reason being is the news that we get might not be the news that we're looking forward to. So let's look at today's economic calendar for this week and see, is there anything coming down the pike that might help give us some direction where mortgage rates are going and the whys behind it? Well, on Monday, you go through here, and there's really not a lot of information there that's going to help us out. On Tuesday, we have a couple Federal Reserve speakers coming out. We do have API crude oil inventories. That's not really going to give us any direction. Wednesday, we got nothing. And then on Thursday, we're going to get continued jobless claims, initial jobless claims, PPI, CPI, all the inflation numbers. No, we're not going to get any of this stuff because the government shut down, so we're not going to get continued jobless claims, existing claims. That helps figure out where the jobs market is. Then on Friday, we were going to get CPI. That's going to give us the consumer inflation, how that's going. With any of this, without any of this information, we're flying blind. So once the data starts coming back, is it going to be good or bad? So we need to focus in on when the data starts getting released. What's the inflation numbers look like? That's going to be a big piece of this. But they came out last time and said it's all about the employment numbers. So Friday, there was some analysis done saying about the employment numbers. They didn't come in all that bad, but they didn't come in all that good. So we're going to continue to watch all this data to provide you, at least some data, some hopefully guidance on what's going on with these and the whys behind it. And without the economic calendar and a lot of that economic news, it's really hard to do. So let's get over to see where the markets are going right now. This is the MBS market. This is a mortgage bond that trades on Wall Street, and this is what we follow on my channel if you're trying to figure out what's going on in the interest rates. Now, if you don't have access to my channel, if you did, you could subscribe over there if you would, but if you don't have access to my channel, just watch where the 10-year Treasury is going. Now, this thing needs to close and stay below 4% for the market to rally. So what's been expected is we're going to get a bond market rally if and only if the 10-year Treasury can go below and close below 4% and stay there. Okay, so that's another piece of the puzzle that we're going to monitor. But if you're new to my channel, here's what we monitor here. We monitor what's going on in the MBSs. This is a mortgage bond that trades on Wall Street, and the yield on this bond is the biggest component of your mortgage rate. Okay, so all you have to understand is this. If the price of the bond's going up, that means the rates are coming down. Okay, there's a yin-yang effect. If the price is going down, it means the rates are going to go up. If you look at a 2-day chart, not bad. If you look at a 5-day chart, even better. So did you lock in yet at these rates? If you haven't, well, what are you waiting for? Are you monitoring for lower rates? Well, I'll give you a tool that you can use. So if you're a homeowner right now, we have what's called the RateWatch 2.0. So what this does is it allows you or gives you the opportunity to give me what rate would you be interested in refinance. So if you're at 7, maybe you're looking at 6%. So go in and click RateWatch 2.0. Let me know what interest rate you would be interested in refinancing. What I'm going to do is I'll send you an email, I'll send you a text, and I'll go over what your new payment would be, what the cost would be, and what your break-even point would be. If it makes sense, we'll get you locked in and get the paperwork started. If it doesn't, we'll just add you back to the RateWatch tool to bring down that rate. If you're a home buyer or you're building a house, what should you do? Well, let's kind of give you a little bit of guidance there. If you're looking to buy, you're most likely going to buy in the next 45, 60 days. I think you're going to be okay. But when the government has said, when it opens back up, you're going to have to monitor a lot of the inflation numbers and where the markets are taking us from there. Again, the easiest way to do this, just subscribe to my channel over there. Okay? So what my expectations are, if you're looking long term, I really don't know where they're going to go. Okay, and I'm being honest with you here because the data we don't have, and we haven't had it for about a month now. As the data comes in, that's how we're going to make our decisions. So I wouldn't look to give a horse in the mouth. These are the lowest rates we've had in over a year. What's happened over the last two Septembers, mortgage rates hit about 6.2. And they jumped all the way back up to 7.2 within days. Well, this time's a little bit different, but if you want to protect yourself, please even fill out the RateWatch tool over there. But if you're a home buyer or looking to build a home, well, go to our RateWatch. We have several tools for you here as well. If you're looking to buy, there's a down payment assistance program right through here that'll give you up to $7,000. It's virtually free. There's no lien on your property. There's no payback. So even when rates go down and you're looking to refinance, you don't have to worry about this thing because it's not a lien on your property and you didn't have to pay it back. One of the best programs out there. If you're looking to buy and you're just confused, you're a first-time home buyer, reach out to us. We'd love to help you. So what you need to do is go to therateupdate.com. There's all our information right here up above. Give us a call. Ask me a question. Schedule a consultation. These are all things that we provide you access to, and it's all free. Just ask us questions. And also on Wednesday, we have how we show you live. And I'll put last week's video up there. We have a live event each Wednesday to show you how we compare your loan with over 30 different lenders. Now, if you're a little bit new to this, my slogan here is one application, one credit pool. We're going to compare your loan with over 30 different lenders. Folks, who I am is, my name is Dan Frio. I'm actually a federally licensed mortgage loan officer. I'm licensed in all 50 states as well as Puerto Rico. The unique thing about us is we're set up with over 30 different lenders. So when you call in, we can give you programs, interest rates, products from 30 other lenders. How do we do it? I'll put up last week's video right up through here so you can understand it and follow along. So that's what our looks like for today. We also focus in on earnings reports. We don't have many coming in today, but tomorrow, Wednesday, and Thursday, we're going to go over the earnings reports, and there's a lot of them out there. Coca-Cola, GE, 3M, General Motors, all these companies are going to come out with earnings this week. We're going to show you how their directions are. Are they healthy companies? Are the markets starting to decline? Because this is also going to give us a role and give us some ideas on what's going to go on with these as well. So join me each Tuesday where we talk Stock Talk Tuesday. I'm not a stock advisor or a trader, but my goal is to help you come in here as a new investor, just learn the market. So what is the Dow Jones? What's an ETF? How do you invest? How do you invest in Bitcoin? Is it a good idea? We talk about those and more. But my whole goal here, folks, is so you can understand what's going on with these and the whys behind it. Because I'm a federally licensed mortgage loan officer. If you're anywhere out in the country needing some assistance, I'd love to help you. So go to therateupdate.com to learn more about me and my team. Otherwise, it's hard to predict what's going on with their interest rates, but tune in each day and I'll give you at least what direction they're taking for the day and the whys behind it. Thanks for watching. Don't forget to subscribe. Reach out to us if you're in need of refinancing or purchasing. Thanks again, and I'll see you later today at the closing bell to let you know how this mess ends for the day. Thanks for watching, folks. I'll see you next time. Bye-bye.